we will be talking about serious growth companies. And we're joined by Roman Prokofiev, who will moderate it as a member of our strategic council and etc. And in his letter, he once wrote that 99% of panels are really boring, and most people who are attending are on their phones checking their news feeds. And he said that he wanted to do things differently this time around. So all of those of you who thought it was about time you left or disconnected, please don't. And Roman, the floor is yours now.
Дякую. Да, я чесно обіцяю дуже постаратися для того, щоб це було цікаво, бо
Thank you. I will do my best to make it interesting. Because normally, you know, sitting through a panel discussion is very, very difficult indeed. So let me try and invite some of our panelists. Anton Avrynskyi, CEO and co-founder of Liparteliani, Andrii Bezverkhyi.
Зірочка, але яка досягла дуже
I know, a rising star, CEO and co-founder of Prima. And I hope I don't butcher your name.
Disruptive IFC. Yeah, sorry. Аня Шувалова, принципал Horizon Capital, найбільший private equity фонд в Україні.
Aня Шувалова, largest private equity fund in Ukraine. Станислав Степаненко, managing director for Endeavour Ukraine, formerly of Mission Impossible, joining us online. And Igor Zhanov couldn't join us due to personal reasons.
Because we have English-speaking panelists, but you can answer on any language that you prefer, because I guess to show your soul and to show your experience, sometimes it's better to use your native language. Today I want to play in a role-playing game. While I haven't seen my wife today in this room, I can play role game with all other people here. And my role, I'm ambition founder Max. I'm really brilliant. I'm brilliant. At least my mom every day told me that I'm brilliant and I'm amazing. And you know, she was really right. She was really right, because I have already built a great business. It's a subscription farm organic eggs. We have already reached 5 million annual run rate, and we are not a loser like all the startups in US. We are profitable. We make 1 million in EBITDA. So my first question, I don't understand why I should to spend my time to raise money and to give shares to some investors. We are really fine. We have a growth like 40% last year, and we are our target to make 30% this year. So please, I trust you. You're my consults. I trust your opinion, but please explain me why I should go. How you, if it's relevant and from your experience, how you think about this? Why I should raise money or I don't? Anton.
Thanks for having me here, and I'm happy to see all of you, and Ketevan, hello to you. So yeah, I will answer your question from my experience. So and first of all, because we had long experience of raising money in different stages at Liqui24. So first of all, you have to understand what do you want, where you want to go, and who you want to be. You as a founder, you as a company. So and based on that, you have different ways or different paths how to go there. So some of these paths they can be without investments without raising money. Some of them not. And from our experience, when we started business, we started from our own money, we invested own money, and only after the moment when we saw product market fit in Ukraine, we started in Ukraine, we understood that yes, we need to raise money. Why? For growth in Ukraine and for create some like borders, like barriers, by creating technology, by creating software, to create these barriers to other potential competitors, and also to become big and to become a market leader in what we are doing. So it was our first stage. At the second stage, in almost 2 years,
Anton, sorry to interrupt you, but I want to understand better. What's product market fit? How I understand that I'm reach product market fit? I make 1,000 euros, or 1 million,
Oh,
10 million.
what
about that? What is product market?
We saw that customers loves. It's a hard question, and there are a lot of thoughts about it. For us, it's retention rate. It's that the customers, they pay us money for our products, and they pay it for many times. So, and we created our own level of retention rate level, that we understood that yes, when we will achieve this level, we will think that we will have product market fit. So it's our opinion. Again, let's come back to my answer. So second stage was when we like become big enough in Ukraine. But our internal request was to build something big. And I mean, to build a company and solution for millions of people, and to become company with 1 billion valuation, or minimum hundreds of million USD valuation. And build company like this impossible on the market with total volume of few billions. So it's impossible to build multi-billion-dollar company on the market of multi-billion dollars. So that's why it was the only solution to start working at the much bigger markets. Like, for example, for us, it's European Union market that are 100 times bigger than Ukraine. So that's why the second fundraising process, we started with another type of investor to start and to launch bigger markets in the European Union. And also we saw potential risks from some like questions or potential attacks from some institutions. So for us was second question is to find reputable international investor to potentially protect us from such risks. So to summarize, you have to understand where you are, where you want to go, at which stage you are right now, and to choose right investor to each stage. And for if you can grow, and if your internal request requires you to grow with your own money, it's much better. But if your internal request,
you have a money.
If you have, of course, if you have a money, but maybe, and yeah, it depends on you. So yeah, thanks.
Thank you.
Oh, okay, always work. So I will try to make a parallel between what I learned in 10 years of running cybersecurity company and eggs, right? So first of all, job well done, like 5 million ARR. I mean, wow, that's better than most SaaS businesses. Like most don't make it there. EBITDA positive, this is unheard of. Now, the main question I would ask, if you love eggs, if your mission is to give good eggs to humanity, what is the end goal? Like, do you want to just kind of hang out with friends and supply those eggs so you can have fun time together? Or do you really want to change the world through eggs, right? That's the first question, right? If it's the first one, if it's a lifestyle business, you don't need external capital. Investors will demand that you change the world, or you die trying, right? And they would probably prefer the first one. So when I started SocPrime, we started with two of my friends, right? Actually, two colleagues who I met on the job, and then we became friends. So expertise was a thing that united us. We could probably work as cybersecurity consultants until end of our days, and we could probably earn $1 million each if we just established it as a company. So not worked for a guy, but be 3 guys working for multiple companies. So we could bid in your EBITDA, no offense, but probably in a year or 2 until EBITDA wrap. But what are eggs? Eggs, I think I did some homework, right? Just, I hope it was allowed, but total addressable market for egg consumption is $60 billion a year. However, it's not growing as fast. We can only eat as much eggs a day until it feel not so good, right? But it will actually double in 10 years. So 5% year-over-year growth. Now, can you supply enough eggs? That's a different question. Assuming you can, right? Leveraging the brand you established, you can attract other egg makers in your country or worldwide, right? So you need a technology process to work out logistics and all of that. Is market big enough? No, I think 5% year-over-year growth, it's not growing fast enough. What else can we do with eggs? Well, eggs actually considered superfood, right? So you have actually essential minerals and vitamins in them. And the biggest consumer of that superfood these days could be Army. Army food market is $432 billion, and it's growing faster, right? For many reasons we understand. So if you would sell eggs to Army, we all know the story, but if you would do it legit, actually all what you need to do is to break eggs and freeze them and ship them in the cans. So super easy process, as long as you have enough supply. But then you have lots of eggshells. That's the thing that bothered me as I was driving here. And I found a solution. What can you do with an eggshell? Well, actually, there is a professor, a doctor in Australia who actually has proven last year, if you break eggshells and you actually bake them, you can turn them into, what is it called? Calcium CO3, right? Which is actually a very good electricity conductor, much safer than using fossil fuels for electrodes in lithium batteries, right? So it's a bigger market. Today, it's a smaller market than eggs consumption market. But 10 years from now, it's gonna go through the roof, right? According to all forecasts, 23% year-over-year growth. So suddenly you have full manufacturing cycle. Is that your mission? If it is, you better raise money because you have to beat every other egg maker in the world. You need to have all those babushkas giving eggs to you through drones and not wasting those shells. Because every time in the morning, like when me and my wife cook eggs, we break the shell. We waste half of the value, which is growing faster. If that question's bothers,
I think I have found the co-founder to my company.
I actually think it's a bigger market. It's a bigger market than cybersecurity, which I spent 10 years. But all those things are parallel to what we were doing 10 years ago. We could be consultants or we could do something that's repeatable. The problem was with our consultants, like it was our brains and hands. That was not scalable. And then we thought, what are we doing? Well, we're producing algorithms. How? Through manual labor. Can this be automated? Not yet. Can we attract other people like us? Yes, so we added crowdsourcing. Then we needed similar language, and it all created a marketplace value where we have supply and demand. So the people who create cybersecurity defense algorithms these days are the same babushkas who, hiring hen to make eggs, right? Okay, so two people, animal and the human involved, and just human involved. So you have supply and demand. Similarity. Is the market big enough? Like we just said, hey, we're gonna give you rules, right? So it wasn't like we're gonna give you eggs, but you have to go through channel for eggs. We also find out the harder we need to go through channel, so that everybody will buy directly online, and people would do it if you sell it cheap. But then we found out that the check can be higher and market can be bigger. Essentially, it led me to using everything built in 10 years to build machine learning and AI models, which suddenly is possible through all the innovation in the industry. So because of that, I raised venture money back in the day, and yeah, we're gonna keep doing that because the mission is bigger. I cannot turn what I did in lifestyle business. You can still stop, still do normal. But the question is, what do you want to do? Do you want to?
Thank you, thank you, thank you.
I'm afraid that Andrii is going to pivot now. Eggs business.
Yeah, actually, one of the inventors of the language that we are using is growing organic eggs. Right? that guy is not from Ukraine; he's from Germany, but he's our advisor. So, yeah.
Anna, can you share your experience?
Well, as an investor, we kind of give this money to startups for various reasons. Some of them, like in case of Liqui24, the startups are launching at new markets. For others, it's M&A play, so they want to grow faster through acquisitions, not only organically. For others, it's trying new things, launching new products. So it really depends. There should be a goal and there should be a strategy. And for an investor, as long as the strategy is a solid one, and in a conversation with a startup, we usually involve a lot of different levels of analysis to understand whether the numbers make sense. So any reason would be that is good enough for the business to grow multiple times over the next 5 to 10 years would be good enough for us.
Thank you. Thank you. Ketevan.
Hi, everyone. Sorry not to be there in person. Hopefully next time. I really want to come and attend live. So thanks for having me online. I mean, fundamentally for us, similar to what was just mentioned from now investor side, because we've been listening a lot to founders. I think similar approach, but I think fundamentally it also comes down to ambition. So is a founder happy with 5 million and 1 million EBITDA, or they'd rather have 50? So I think that drive really dictates the rest of the strategy and the rest of the approach. And then, usual boring stuff kicks in, whether the market is ready, whether the market is right to that kind of approach, and what should be applied to make this ambition a success and the reality. But in my view, the main driver is what really is driving the entrepreneur and what makes them happy. Is it small scale, profitable, cozy business, or is it something more ambitious?
Thank you. Sviat.
Yeah, hi everybody. Pleasure to join online, and I'm really jealous for the audience in Kiev to have such a panel and so many great people. As we launched Endeavour in Ukraine just a couple of weeks ago, we are here to provide a network of support for everybody. Right? We will select the fastest growing entrepreneurs from Ukraine and in Ukraine to be able to support their ambitions. Right? And we are a not-for-profit visa fund with Endeavour Catalyst, and you've heard Pete before. But really the core question to an entrepreneur is about the ambition. And I believe the first question to Roman is whether it's a lifestyle business or you want to grow it much bigger than 5 million in revenue. And if that's a lifestyle business, probably you don't need money or maybe venture story. But if you have ambition and if you want to grow the business to next level, you most likely will have a number of questions. In a way, when we speak about ambition, for this conversation is how big is your balls? How big is your eggs, right? And whether you have local outlook for the moment, whether you want to grow a big company over the years. And most likely there are people in this world, other entrepreneurs, who've done something similar, who had similar challenges or plans. And what we provide at Endeavour is putting you in a group of peers to be able to have an honest conversation, to grow yourself, to address some of the challenges that you have that may block you from going international, going global, or building a much more profitable business. And of course, via this network of support, we can reach out to mentors that may help you to avoid some of the usual problems, some of the usual pitfalls and mistakes that may save you time and resources. And then at the end of the day, of course, we as Endeavour Catalyst will be happy to discuss investments. But at the end of the day, it's about ambition and growth plans and challenges that you have, and we are here to support.
Thank you. I just measured my balls big enough, so I'm ready to go and raise the funds. And I have next question, very sensitive for startups who have already raised the fund. But before you will answer, remember I have premium ChatGPT, so I can beat you. I'm wondering about price, how to evaluate my startup. I have some idea. I saw that the biggest public company is producing eggs by subscription cost like 10x revenue, but they're big enough. I'm a startup. My expectation of growth much more. So I think I should evaluate like 20x, maybe 25 by revenue. What do you think about my approach? And what is really interesting, how you negotiate your price with your investor who have already raised the money?
Yeah, I can share my experience and the same like Ketevan told and Sviat, that ambitions it's the first question. So which ambitions you have internally, and it's your starting point, starting position in these negotiations. But again, multiples, and it's really, there are a lot of different multiples. There are markets, there are growth rate, your growth rate, and so on. My secret sauce in this, like in our experience, is to have many investors, potential investors, and to start gradually talk with them about potential round and about valuation. So real valuation, it's how much real investors will pay you. So this is your real valuation. And to understand this valuation, you have to start negotiations. You have to start gradually talk with many of them, and then in the end you will understand what is potential your valuation. So it's our experience. So have a lot of investors, talk with them, and then you will understand.
I think it is really, really super important message from Anton and for every startup. If you want to get the best price, you need to have a competition with investor. That is the best way. There is no any other secret except competition from investors.
Absolutely agree. So it's not only competition is the last one. So first there are the competitive landscape, the economical situation, your growth rate, number of investors you have, and the last one, but the most important, is the level of this competition between these investors. If you have this competition, your valuation can differ, many times can differ.
Thanks.
So I guess it depends. So depending on which part of the world you're coming from, where your market is coming from, you can get different multiples, right? So multiple you get in Ukraine will be different from multiple you get in Silicon Valley, depending on what you're selling. The stage also matters. Like the original investors, after 10 years, I'm still super grateful to everybody who founded StockPrime when it was just an idea and 3 guys in virtual shareholder agreement. Was nothing but our expertise in a wish, right? So that's where you're talking about the market size, the pace of growth, and essentially, as any stage, it's more important that emotional connection with the person. Do you come out as a trustworthy person who is committed to the mission and who will keep working it no matter what? Once you raise venture money, it's different. I mean, you may connect fantastically with the person, and I believe that's also important, but venture investors are professional investors, serial investors, right? They will evaluate from every angle. In my experience, when we tripled our ARR back in 2019, we went to raise when the COVID started. I spoke with 60 funds. None of them gave me a term sheet. 3 months later, one of them gave me a term sheet. So I really
60. You
60. Yes. I could say 61, but 60 just to make it. And none of them told me the valuation. So I was told in Silicon Valley, like, forget what you read in the books. When you get a term sheet, that's what you get to learn the valuation from the investor and why it is this way. When I got my Series A term sheet, that's how it worked. I actually had 2 investors giving me term sheets, and one gave me a higher valuation, but I took a lower valuation one. Mainly because you could potentially find an investor who would give you even the double of valuation what is fair market, but then you need to deliver, right? And I would probably prefer an investor who has understanding of my domain and the way, because that investor will also support me along the way and they will evaluate me more fairly. So going a bit lower with valuation, setting realistic targets you can deliver is much better than setting it super high and then not delivering, because essentially as a founder, you want to healthy dilution, right? And then if you don't deliver targets, you will get diluted again and again until you targets.
Thanks, very useful.
I really liked Andrii's answer, and that's maybe because he really have seen the process from the inside and spent a lot of time talking to investors, so he understands how it works. Usually, like looking at the public multiples is a good starting point, and it would allow you to calibrate your expectations. Because if you expect that you will be able to raise at 20x revenue multiple, and then you get the term sheet at 10x, probably you would be disappointed. But on the other hand, if we analyze your business, we might discover that this is actually a fair valuation. because while analyzing the business, we look not only on your at your growth rates, but at other aspects. As Andrii mentioned, Ukrainian location might be one of them. The structure of your revenue, whether your revenue is from retained customers and new customers, which markets the revenue is coming from, and many other parameters, including the situation in the market. So that's why you should look at the market. Most likely, it would be better to look at transaction multiples if you can find those. But the easiest way would be to look at public peers, and then just try to adjust those multiples based on your current situation. We would do it anyways when we would analyze your startup, your business, but start talking to investors, and at some point you will get the indication of and the explanation of the methodology that investors use.
Thank you. Ketevan?
Okay, I think a lot has been covered. Then I'll address, a situation where it's really difficult to determine the price based on any other precedent or the market, especially in the new emerging industries like AI. We are actually doing now a transaction which is in a super new sector, in a very new domain of that sector, and it's based on market. It's really impossible to determine any pricing. And then at the end of the day, it really comes to, I think, sometimes multiples are irrelevant, again, because there is no really comparison or precedent that has happened. I think one of the kind of good benchmarks is just a valuation, without a multiple of similar or closely kind of related companies in the space and in the region. So that's also kind of what we look at when there is kind of an extraordinary situation, when all these kind of financial approaches don't really make much sense. So we do all of it anyway. But mostly, sometimes we also have these extraordinary situations where, all the financial models are not able to give you the outcome you're looking. So in that case, as I said, we look at the absolute valuation and the market, and we kind of compare it to the similar companies in that space, and whether for the stage that company is at, that valuation in absolute terms makes sense. And that's how we determine. At the end of the day, there is often a choice where the founder has to kind of make a trade-off. Okay, of course, like for founder, the price is always cheap, and for investor, it's always expensive. So there are always these trade-offs, and sometimes there is just a decision to be made. Okay, what's important? Is it dilution, or is it like to pocket money quickly and go to market in a more aggressive way and quicker to kind of capture market share or accelerate growth, whatever. So I think it's never clear cut. But I think when in times of confusion, I think it kind of helps to take a step back and realize what is really important and stick to it. Because sometimes, founders can be stubborn, but so can be investors. And then somebody has to more or less compromise. And a good investor would never want to squeeze an entrepreneur. So that would be my point.
Thank you. Sviat?
Yeah, so at Endeavour, we basically select and support companies to grow, and then eventually we can work on investment. And it's in a way mandatory to us to offer investment, but that's optional to the company. When we think about Endeavour Catalyst, that's a rule-based investment fund, meaning that we are first to chip into the round to provide up to a couple of million dollars for up to 10% of the round size. But for those companies that are in our portfolio, those are competitive rounds. So what we try to do in terms of being an entrepreneur first and providing value is rather to support them on this fundraising journey. So indeed, as Anna mentioned, some of the reference cases usually help to understand the valuation or investors type that company is looking for. And definitely when we look at agri-food domain, we have over 40 companies in Endeavour. We have such companies as Glovo or Corner Shop, very famous and very big, successful companies that definitely can explain how to work with investors and do a back channeling sometimes. Finally, one of the cases that we discussed recently with one of the companies was not about the valuation per se, but about going to the right partner within the investment firm. And that was a case where the VC fund had still, has 6 partners, but 4 out of 6 are not investing in emerging economies. So even they are, listed on the website, and you can write them an email or get an intro. In most of the cases, they will just, don't look into your direction. But 2 out of 6 are actually investing in emerging economies. And one is specifically looking for the next, let's say, UiPath from the region, or Snowflake from the region, from CEE, and is very interesting to have that kind of conversation with promising startups. So to sum up, for us, it's about really supporting entrepreneurs on this path to fundraising, if that's something that they choose. Invest first small amount of round and really help them to quickly get the best investors on board. And we work with multiple tier 1 investors globally, regionally. So we definitely have an insights in terms of how much they help post-deal, post-investment.
Okay, thank you. Okay, I have found really a good guy. We have already negotiated a price, but right now they started to ask me a lot of stuff, like my bank account statements, employee contract. They asked me about intellectual property, license, and so on. Why they are doing that? They don't trust me. But if they don't trust me, why they want to invest me? I don't understand why they ask me so tons of data. Could you elaborate your experience of due diligence process, how it was?
I will tell just a few words about that. So, of course, investors and Horizon Capital and others can give more details about why. But from my perspective, I understand that the investor should analyze deeply the company, should trust the team, the founders, and the company should be as maximum transparent as possible. It's the first. But from the company perspective and from the founders' perspective, I saw a huge impact, because after these due diligence processes and after receiving investments, we optimized a lot of our processes. We made better structure and so on. So for company, these processes brings benefits as well. But more details, I think, Hanna and...
Yeah, I can just comment, follow on what just was said, because we are investors in Liqui24, so we went through this process together with the company. It's quite standard to request certain information before making an investment, and the rationale is actually very simple. You want to understand that the people you are going to work with for the next 5 to 10 years are reliable, they don't avoid taxes, they have all the IP registered properly, and you won't face any legal potential disputes. So if the company if the business is run smoothly in the right way, then there should be no problem for a founder to disclose the information requested by investors. We usually work with consultants like Big Four companies, and they help us in this assessment. This is not done to decrease the price or to cancel the negotiation altogether. It's just a sanity check in our case, in most cases. But we develop a plan after that we follow on after the investment is made with the company to prepare the company for the next level in their development.
Just short idea to add. As to me, just understanding that these processes will be brings for you additional benefits, because you are preparing to that, and your company becoming more transparent and more structured. So as to me and for us, from our experience, it brings us a lot of benefits. So yeah, thanks for that for Horizon.
Yeah, it's in our case, it's quite a rare experience when the company, when we decide not to proceed with investment after the due diligence, because we try to establish very transparent and trustful relationship during the previous levels. But maybe Ketevan has something to add on the due diligence on the FC side.
But for team, it's hard times. For whole team.
Only for months or so. It's not like
it's hard times. It's hard times.
I think if you complain about Horizon's process, you have to go through IFCs, and then you will you will probably have a much worse view. No, I think as IFC, we take this really seriously in terms of the reputational risks and everything involved. And especially when it comes to equity, we really want to choose the right partner, which is basically aligned with IFC's strategy, IFC's policy, vision, and the values that the institution has in terms of transparency, in terms of openness to work, and complies with all the performance standards that we have and appreciate as an institution. So above all, and even before we look at the financial performance, we do a very thorough background check on potential investment and the team, because we would not even look at how successful business is if basically the founder won't make a cut on that initial screening of the background and reputation, and all the matters that was mentioned in terms of I don't know, I'm not sure we go through bank accounts that much, but the rest of it is pretty much quite overwhelming. And to be honest, nobody likes doing that. It's just, I think, a very helpful step also for future alignment to avoid surprises.
Sviatenko. Sviat?
Yeah, probably to add what Ketevan said, it just rules of the game in a way, and we need to play by them. Of course, somebody has more diligence, somebody less, but at the end of the day, it's also for the founder to be prepared to have fundraising as a priority, and basically a full-time job for the founding team to be able to support investors with data rooms and documents. And I would just mention here that it is also critical to receive an answer from investor as soon as possible. Both positive answer, yes, going in, to become a partner, but also a no answer to focus on other investors to potentially close the deal, and not wait eternally for some information. So I believe that being prepared, having the data room and documents already in place, and anyway, it reflects the maturity of the company, right? Bank accounts is not a big deal to provide, right? And having this in mind, being prepared and choosing the right partner based on the data that you shared, that's definitely the path and standard in the industry.
Thank you. And Andrii, you have raised money from prominent Japan fund, the next venture. I guess your due diligence process was also interesting.
Yes, I've been quite a few due diligence processes, and just a correction. Well, DNX is mainly capital over Japan. The fund is as Silicon Valley as it gets, so most of mentioned partners are physically in the valley. Very diverse fund. By the time I got to DNX, like I mentioned, there was 60 funds before. So actually, after each dialogue, I had a collection of documents which were prepared. And in the beginning, I was horrified, but then I kind of saw that people are asking mostly for the same stuff, but somebody has differences. And you just get a stack of documents ready, and you don't have to create all of them as a founder, right? If it's financial, maybe CFO as a founder, maybe not. If it's legal, and so on. The only thing, like if it's software business, don't give your source codes. That shouldn't be needed as part of your diligence. I only had to give my source codes once, but that was not for venture investments, it was potential M&A, and that way it's down to a third party. So people get the audit of the code, but not access to the code. That's very important in software business. Other than that, you should be happy you get those requests as a founder, because after every unsuccessful process, you'll have yet another document. And every time you see a metric, you're like, is this metric useful to my business? Is it telling me something I didn't know? So look at it as a learning exercise. That's how I kind of got through it, because I'm not a finance person, I'm an engineer, and it was difficult for me in the beginning. I would say I saw much less requests from DNX compared to some of the European investors. Again, you need to look who the LPs are. I mean, some people will ask for your like P&L and cash flow and like all of that stuff, ARR predictions. all the way to the founding of the company. Some would do 5 years, some would do 3 years. It's all normal. Like you better keep those things tidy. If you don't, you will have to address them. And that's a cost which investors probably want you as a founder to bear before you get the money. That's normal. Yeah. And once you collect enough data and you go through many investors, you start to see strange asks. It's easy to figure out. Like if people suddenly want, let's say, give me the name of all the user accounts on your platform. You're like, oh no, that's probably not it, right? So it makes you smarter. It makes you sharp. So yeah, there should be, if you run a healthy business, there should be pretty much nothing you can hold back, because as a founder, you think you're very different, but the investors see that many companies are doing a lot of the same things. That's simply a good learning exercise, and you only get better, business gets more mature.
Thank you. I don't remember have I shared the story with you, but when you were in process of due deal of DNX, they called to me and asked me a different interesting question. Do you know Andrew? Okay, I know. Okay, what is your relationship? I know Andrew, he's a cool entrepreneur. Okay, could you share your opinion? Have you seen ever that Andrew did harassment? No. Okay, maybe some criminal records or using drugs, something like that. So I say no, and I hope that you will give me some shares for that, because that's a process of due diligence also. So you can't be a nice guy in a business and be an asshole outside of the business. Is really really important. Guys, thank you. Thank you. I decided that, I need a raise round because I want to create my eggs empire. I realize that money is just a fuel for all my ambition, for all my goals. I realize that it's a long journey. I have to connect like 100 venture fund to reach them, to get at minimum 3 term sheet to negotiate my best terms. Thank you all, and thank you for having been here. Thank you.
Thank you very much. Goodbye.
Thank you. Bye, guys.